Hey there, market mavens and chart champions. Welcome to another data-packed episode of Market Pulse, where we dive deep into the technical patterns that could make or break your trading week. I'm thrilled you've joined us today as we explore three heavyweight tickers that are making serious moves in this volatile May market. Before we jump into the charts, remember that everything we discuss today is purely educational. I'm not a financial advisor, and these analyses shouldn't be taken as trading recommendations. Always conduct your own research before putting your hard-earned capital to work. Quick reminder, if you're looking for more in-depth analysis and real-time trading discussions, check out our Discord community. Just click the link in the description to join fellow traders who are navigating these choppy markets together. You'll get access to premium content that we simply can't fit into these videos. Alright, let's get down to business. Today we're going to talk about Uber, Tesla, and SOFI. Each has its own unique story to tell, so grab your notepad. This is going to be good. First up, let's talk about Uber Technologies. Currently trading at around $82.80, Uber has seen remarkable momentum with a gain of approximately 27% over the past month. This ride-sharing and delivery giant has been in a strong uptrend since its recent earnings report in early May. Looking at the technical picture, Uber has formed a clear bullish channel with strong support established around the $69.90 level. This is a critical zone to watch as it represents the previous resistance that has now flipped to become support. On the upside, we're seeing resistance forming at 84.70 with an even stronger resistance zone at 88.50. The RSI is showing values above 50, indicating bullish momentum is still in play, though we're approaching overbought territory. The price action is showing some hesitation near the upper boundary of the bullish channel, with recent candlesticks displaying smaller bodies, suggesting a potential consolidation phase ahead. What's driving this momentum? Uber recently reported impressive Q1 2025 earnings with a beat on EPS at 0.83 versus the expected 0.50. While revenue slightly missed expectations at $11.53 billion, the company's net income of $1.78 billion showed dramatic improvement year over year. CEO Dara Khosrowshahi has been particularly vocal about autonomous vehicle technology being the single greatest opportunity ahead for Uber, with their Waymo partnership in Austin exceeding expectations. For traders, this setup suggests a potential strategy. Watch for any pullback to test that $69.90 support level as a possible entry point, with a tight stop loss just below. If the stock breaks above $84.70, we could see a move toward the $88.50 target zone. However, given the extended run-up, be cautious about chasing at current levels. Next up is SOFI Technologies, currently trading at approximately $13.18. SOFI has been on an absolute tear lately, rallying an impressive 40% over the past month following stellar Q1 results that surprised even the most bullish analysts. From a technical perspective, SOFI has recently broken out of a downward parallel channel, which is a significantly bullish signal. The stock is currently testing the $13.88 level, which represents a key resistance zone. Support has formed around $10.74, which should be closely monitored if we see any pullback. The price action shows strong bullish momentum after breaking out of the downward channel. The recent price movements display higher highs and higher lows, forming a healthy uptrend pattern. Volume has been increasing on up days, suggesting institutional buying interest behind this rally. What's fueling this impressive performance? SOFI's Q1 2025 results showed revenue surging 33% year over year to $771 million, with operating profits up 46% to $210 million. The company doubled profit estimates, achieving a 200% year-over-year increase in adjusted earnings to 6 cents per share. Particularly notable is SOFI's fee-based revenue, reaching a record $315 million, now representing 41% of total revenue, demonstrating successful diversification from its lending roots. For traders, the strategy here looks clear. Watch for a confirmed break above $13.88, which could signal a move toward the $15.50 to $17 range in the coming weeks. Alternatively, if we see a pullback, the $12 to $11.50 zone should provide strong support and could offer a better entry point. The Wall Street consensus shows a price target of $14.38, suggesting analysts see further upside potential. Finally, let's examine Tesla, the ever-controversial EV maker. Tesla is currently trading around $298, showing remarkable resilience with a 32% gain over the past month despite mixed news flow. The technical picture for Tesla shows a complex setup. The stock recently broke above a significant resistance zone at $291.85, which had previously capped advances in both March and April. This breakout is technically significant. Support has formed in the $246 to $218 range, creating a wide but important zone to monitor. The price action shows signs of exhaustion after the recent strong run-up, with recent daily candles showing smaller bodies and longer wicks. This pattern often suggests momentum is losing steam and a consolidation or pullback may be on the horizon. What's happening with the fundamental picture? Tesla reported Q1 2025 earnings in April that missed expectations, coming in at 0.27 per share versus the expected 0.41. However, the market seems more focused on the company's future prospects, particularly around AI integration in manufacturing and autonomous driving technology. The stock has been particularly sensitive to US-China trade talks, rallying on recent optimism about potential tariff reductions. For traders, Tesla presents a challenging but potentially rewarding setup. The strategy here could be to watch for a pullback to test the newly established support at $291.85, former resistance. If that level holds, it could offer an entry with a tight stop loss. On the upside, a sustained break above $300 could target the $330 to $350 range. Given the stock's volatility and extended run, position sizing is especially important with Tesla. As we wrap up today's technical analysis, a fascinating pattern emerges across these three innovative companies. We're seeing strength in technology stocks that are pushing boundaries, whether in transportation, financial services, or electric vehicles, despite broader market uncertainty. The trading environment remains challenging, with earnings season winding down and macroeconomic factors taking center stage. Keep a close eye on support and resistance levels we've discussed, as they'll likely determine the next major moves for these stocks. Remember that technical analysis is just one tool in your trading arsenal. Always combine these patterns with fundamental research and proper risk management. The markets can shift rapidly, especially in this environment, so stay nimble and protect your capital first and foremost. If you found value in today's analysis, please hit that like button and subscribe to stay updated on our latest market insights. Your engagement helps our community grow, and we're grateful for every new member who joins us. For more in-depth discussions, chart analyses, and real-time trading strategies, don't forget to join our Discord community through the link in the description. It's where serious traders gather to exchange ideas beyond what we can cover in these videos. This has been Market Pulse, providing educational content on technical analysis. As always, this analysis is not financial advice. Please conduct your own research and consult with financial professionals before making investment decisions. Until next time, keep your charts close and your risk management closer.